Harris.
Well, when you're privatizing a lot of the economy, that'll change your political views.
He's Doge's man. And by the way, congratulations to Dr. Oz, because I think he's going to come in and put the wood to some of the Medicare problems. I am a big Oz fan, I will say that. Knowing him for a very long time. At one point, one of the premier cardiologists, then kind of went a little more commercial. Did run for Senate in Pennsylvania. Lived at Pitcairn during that period.
Yep.
But I think he's smart. I think people are going to be surprised at what he has. I know he's technological. I saw his app that he had put together to make it so Medicare and healthcare was great in 2018. So he's been on it.
Speaking of guys you've known a long time, what is Navarro thinking right now? And do you consider that his view might once again become ascendant?
Well, I think that's a great question. One of the reasons why we're doing a little trimming for my charitable trust is counting Navarro out has been a fool's game. And Navarro represents, I don't know if you saw the piece today in the FT about the Chinese saying we're ganging up against the British. Well, Navarro is going to reassert himself on the national security issue.
Yeah, meantime, Colombia deal with Beijing today. Yesterday it was Brazil, Beijing. They're definitely working the global south.
Isn't it interesting that they're now a poor country and they're giving money to these countries that are lesser developed, and we're going to the wealthier countries and we're getting money from them? So I would rather be us than them. They're giving away money that they don't have. We're taking money that we don't have. But yeah, something I thought of.
I don't know if I like it. Yeah.
Does it mean we have to accept their jets for free? And
what?
Yeah, well,
what are we doing?
I'm not really into that.
Yeah.
It's Columbia University, right, that's getting the money?
No, it is not. And Harvard, obviously, they withheld another $450 million.
My jokes mean nothing. President Garber is...
that's Harvard's president, yes.
You know what I'm saying? He's putting up a fight.
Yeah, they are absolutely litigating with the administration.
Not like some of the law firms,
over
right?
a lot of different things, including potentially revoking their tax-exempt status.
This would be amazing. That would be
obviously the U.S. has been withholding significant sums for research from many different universities. Stories today, by the way, about an exodus of expertise to a certain extent, PhDs who are being hired in other companies in other countries.
Not to mention research that we won't have in 30 years. GLP-1s started, Jim, at NIH and with Gila monster saliva.
During the whole period, the one thing that we knew that we've been ascendant on versus, say, the Chinese, who have 500,000 people in their hospitals, we've always been ascendant in healthcare. I mean, like, one of the things, like, do you remember when Dr. LaPoute did this piece, my physician, for CBS on 60 Minutes about Hopkins? And Hopkins being like, which has just run the table against disease and had the best anti-COVID. They crushed Hopkins. They crushed it. Now,
you mean right now?
The government. Now they're like only go to lacrosse or something. I've supported that hospital, I think it's the greatest university in the country when it comes to healthcare.
These are some of the things we haven't yet seen any impact, in terms of the economy. For example, cutbacks. The University of Rochester runs a huge medical system in the state of New York, enormous, one of the largest employers.
Well, but is it
cutbacks there? Those are the things we'll have to see what the impact is, if there is a significant impact in terms of the government withdrawing funds and things of that nature.
When I talk with people about our world, they always say, why don't you talk about the destruction of the greatest healthcare system? And I'm talking about the university basic research, not applied research, but we were the premier basic research.
Right. Yeah, but there's also a huge disruption as a result of RFK Jr. at HHS and what he is doing.
Look, I was hoping he'd go just pure, the food stuff is necessary.
Yeah. He is going to be appearing. Is he going to be appearing in Congress in front of the Senate, I think, to testify? I believe so.
I hope he sticks with food. If he sticks
House Appropriations,
yeah. Remember, food doesn't look like food.
Guys,
like Fruit Loops does not look like Fruit Loops.
No, I did want to mention the IPO market, which we've talked about, of course, the dearth of IPOs. Things are picking up a bit. eToro did announce the pricing, upsized its public offering. Think Robinhood competitor. A lot of crypto as well. They tried to come public previously. There it is. They 11.9 million shares at 52. We'll be obviously watching that for when it opens. This is a company, if you recall back during the SPAC craze,
Yeah.
they had was one of those Betsy Cohen SPACs that was going to take
From
them public.
Philly.
I
From
remember
Philly.
bringing her on,
Israel and
eToro, for the eToro deal, and it valued the company then. And this is, as you see, over 4 years ago at $10.4 billion.
Right.
They amended the deal, brought the value down to 8.8, and now they're getting above 4.2, of course, because you're talking almost 12 million shares at 52. So you can do the new math. That was because we just got updated on that, but
I don't know if I want to be in that team.
but a lot less than when they looked even 4+ years ago. Of course, during the SPAC craze.
Right.
But Chime filed.
Yes, John. This is
They're
why
going to try and get out. I think Circle has filed. You know, you've got a number of different companies that may use this opportunity, both given the lack of volatility in the markets right now, the strength in the markets,
Right.
to take advantage of the window.
Right. Now, the one I'm following, again, is this Capital One. Out to Discover is going to close next week. That's why Coinbase got out yesterday.
Right.
I think that stock is going to be regarded as being a fintech company again. Because
Why do you believe that?
Because they compete, because Discover has a network, just like MasterCard and Visa. And I think that if Fairbank decides to come in underneath, because, you know, we go to American Express. I tried to use American Express in Europe. No one was taking it at the place I went to. I think American Express is the greatest thing in the world. I love it.
We haven't mentioned, speaking of fintech and IPOs, Chime filing to go public.
I did.
big.
Yeah,
International.
It's going to be big. By the way, I just want to be clear on Karp. I don't want to slam him too much, since I do that pretty much every day. But he was a huge supporter of Israel, and you know Trump was perceived to be very pro-Israel. And I did want to talk about that. He's not going to Israel this trip.
Yeah, he's had to answer questions about whether his trip has sidelined Israel as this Gaza offensive, Jim, is getting more serious.
One of the reasons why I think it would be important is that Israel was left off the friendly list. That was really astounding, because there had been such a great relationship between NVIDIA and Israel. And it would be, I thought this was an opportunity to see if the president was going to change these diffusion rules when it came up. Maybe it's changed for everybody, but that was something I thought was going to go to Israel.
eToro, by the way, is a company. Israel.
Yeah.
A company.
Based in Israel.
Yep.
Right.
Jim, a lot of people watching travel trends and
Yes.
wondering whether or not we're going to see a decline in international travel in this country this year. That said, Airbnb's reinvention, Chesky on Squawk today. Is this something you can get behind?
Well, I just didn't like, I didn't know that, I knew that New York was tough on Airbnb. I did not know that they're like nowhere. And this stock has run up very big on Chesky's redo. I happen to be a huge believer and user of Airbnb, but at the same time, I did not. I've often told Brian, and I really like him, Brian, you got to stop slamming your own story. So he comes on and he doesn't hype, because he's just, you really love the way he talks. But
Yes.
I would say, wow, my takeaway was, geez, I guess New York, it's just no.
There are a lot of people who are making a nice living from that. I'm not sure what the thinking was, but then again, I rarely understand the thinking of the City Council of New York.
Yeah, well, it's opaque. Very opaque.
You could say opaque. Yeah,
It's opaque.
tends towards the far left.
Right. Taiwan's semi not up enough. You got to watch the ones that are supposed to be leading us today. But anyway.
Foxconn actually reported pretty decent numbers, although they did take in their growth estimates.
Exactly.
But that's now not as Apple as much as NVIDIA.
No, but it's funny, you forget Foxconn is a Taiwanese company. It's
Right.
not, even though they
China.
obviously operate in China.
There's so much going on, and yet it's all kind of underneath right now.
Yeah, a really interesting time. Even though the indices are green, breadth here at the NYSE
There you go.
is negative. More sectors down than up.
Tesla now down a lot from where it was.
Yep.
From where it was, still up 1.3%.
Well, no, but David, at 4:30, it was flying.
I know, but you always look at 430, like that's indicative of what the price is going to be. Come on,
When the
man.
younger people start trading.
Is it?
Sure, Europe, yeah, exactly.
It's not a particularly liquid market in the
David,
4:30 in the morning.
that's when they move stocks up, for heaven's sake.
Meantime, watch bonds, 10-year, almost back to 4.5. That would be the highest close since late February, as we got Jefferson Waller on the tape, and we'll get Daily tonight. Be right back. Live shot of Washington, D.C. Health and Human Services Secretary Robert F. Kennedy Jr. is on Capitol Hill about to testify before House Appropriations as the ranking member there as he answers questions about cutbacks to HHS. As you might know, in April, the agency began laying off about 10,000 workers, expected to have its workforce cut about a quarter. Meantime, we'll watch that closely. He testifies twice today. Dow has gone into the red rather quickly, down 16 points. Stay with us.
Download the app.
Let's get to Jim and stop trading.
There's a lot of talk about whether Brian Niccol is really able to turn around Starbucks or not. Now, today there's a strike. Some baristas striking over dress code. They have to wear solid black and their black tops. And apparently, obviously, they don't want to have to put out more money. Maybe Brian Niccol helps them or not. But this is not why you buy the stock. You buy the stock because this is just like why everyone's buying apparel. China had been the problem. And suddenly he's got optionality in China, and you're selling the stock because some baristas don't like a black shirt. I mean, give me a break. Now, I will say that the last quarter was not good, but that last quarter did not include good news from China. And I think that you've got to start thinking that he can do something. And if that's the case, that stock's not going to be at 86.
Yeah. There's a good piece last week in Restaurant Business about the beverage business overall getting really competitive.
True.
And that's small players and Taco and McDonald's and others.
Well, look, I've got to tell you that I think that Dutch Bros is doing incredibly well, and they resonate with Gen Z. And I think Dutch Bros, they're going to take the country by storm. They can go all over. I happen to love it. They've got great drinks. It's been a terrific stock. But I just think that counting Brian Niccol out has also been just a very bad bet. He's a very good man.
How about tonight?
I've got Cadence, which is in all this. No one, they don't have any customers more than 10%, but they are a great partner of NVIDIA. And I think that when you look at this company, they do the packaging. They actually make it so NVIDIA works with them to be able to make this stuff. Remember, NVIDIA is an intellectual property company, and these are the guys that really count. You can see the stock coming back. They had a good quarter. Nobody cared. Reported during that bad period. Amazon down, David.
I was going to ask you about Walmart this week and whether or not their guidance is going to be stale, fresh, somewhere in the middle.
You know, what they ought to do is just speak softly, carry a big stick, because they are such a winner in this environment. It doesn't pay to actually say, listen, we're crushing it. But Walmart, Walmart, Amazon, Costco, big three, maybe Kroger if you want to, and then everyone else is really struggling.
I mean, Target shares have just gotten crushed
And
this year.
Target's got this boycott going on. Can't get my arms around it.
A boycott? I mean, the stock's down almost 30% year.
There's a lot of things. I mean, I happen to think the world of Brian Cornell. Their price is a little too high. They have a lot of stuff coming that's made overseas. They're private label, but I don't know.
Jim, we'll see you tonight. Mad Money, 6 p.m. Eastern Time. Relatively flat tape here at the open. Dow's up 2, S&P down 5. Don't go away. Good Wednesday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Mike Santoli, David Faber, live at Post 9 of the New York Stock Exchange. Sarah Eisen's on assignment. Bulls continue to work with some slim year-to-date gains so far on the S&P and NASDAQ. Treasuries, we're keeping a close eye, especially on the long end, not too far from the 5 handle. Coming up this hour, recession odds falling. Goldman Sachs slashes its probability of a recession in the next 12 months and raises its growth forecast. The firm's chief U.S. economist is going to join us to break down that call. Plus, the CEO of Coinbase Chase will be with us as the stock jumps 30% this week on news of its inclusion into this S&P 500.
All right, we are 30 minutes into the trading session. Here are three big movers we're watching. Tesla shares are gaining. The company reportedly resuming imports of Chinese parts for its Cybercab and semi-production here in the U.S., while the Financial Times says a new pay deal could be in the works for CEO Elon Musk. The stock is the best performer in the Mag 7 over the last 1 month after having been the worst performer going into those market lows. United Health is trying to rebound, one of the best performers on the S&P and Dow after yesterday's 18% plunge on pulled guidance and a surprise CEO exit. KeyBank cutting estimates but writing that the company is, quote, staying on the struggle bus. And watch AMD, the stock in the green after announcing a new $6 billion share buyback plan. And optimism grows around loosening trade rules for the group. And on news of a Saudi chip deal, you see the shares up 5% right now.
Speaking of chips, NVIDIA building on strong gains following the China tariff pause and news of a big AI agreement of its own to sell its highest-end chips to Saudi Arabia. A number of bullish calls as well followed on the Saudi news. Bernstein, for example, writing that for investors worried about AI CapEx sustainability, we now have another deep-pocketed customer willing and capable of spend. NVIDIA's market cap, by the way, now above $3 trillion. It's a bit above that of Apple. Microsoft still exceeds all of them. You know, Mike, we mentioned this on the 9, but I had a couple of people say to me, one in particular, everyone's back in on the AI trade as if nothing happened.
Yes.
I'm just curious your thoughts about that and whether that resonates.
It's largely true. Obviously, when all of the focus and all of the pressure was coming from the trade story, there was a constant monitoring of, well, has the AI theme really shifted? Obviously, all the earnings from the hyperscalers more or less ratified that.
Yep.
By the way, over a 6 or 12-month basis, the Mag 7 has done nothing. So they're basically pretty much back where they started. The valuations are certainly below peak and below probably their average for the last couple of years. And we're also at the time of the year, this sounds silly, but where you're going to start to say 2026 estimates are more relevant and you can lean on them a little bit more. So I think all those things together, combined with the fact that if you want to grab exposure to the U.S. market because you were underinvested near the lows and during this rally, that's how you do it. And, you know, we talk about U.S. exceptionalism as, oh, we're able to run bigger deficits because we have the reserve currency. In equity market terms, U.S. exceptionalism is we have a half dozen completely dominant companies with trillion-dollar-plus market caps that, that are kind of their own ecosystem.
And that conceivably are growing faster than
Exactly.
the overall market,
Yeah.
the earnings for the overall market.
No, exactly. And so, NVIDIA, what's the next fiscal year, which is basically, 2026, calendar 2026, it's going to be $250 billion in revenue and $136 billion in net income. That's what the projection is right now.
Right.
The company's going to have more than $200 billion in free cash flow this year and next. It's got to do something with it. It only spends under $5 billion in CapEx. It's a remarkable business. But, okay, so you're paying $3 trillion.
Right, although you're expecting there may be a return of capital pretty significant given the numbers you just shared, right?
I think, yeah.
Unless you're coming up with a completely new thing they're going to do.
Right, so that would be the Apple playbook post-iPhone. You had the huge bulge in earnings power from the iPhone
services
cycle.
and margins.
And then all of a sudden it's like, well, we got to start doing a heroic buyback.
That said, Goldman's got a great chart today looking at what's outperformed mega cap tech since the beginning of 22. It's European banks.
Yeah, it's true. I mean, a lot of it is the starting point, right?
Absolutely.
And European banks were just discarded. And that's why, tech in general has just been a market performer over the last year. So I don't think that what we're seeing right now is a reassertion of Mag 7 dominance. I think it's a revival cycle. I don't think we're going back to the days when we're going to peak PEs. I think you're going to be sensitive to, exactly how much life is left in the AI hardware data center cycle. But that doesn't mean there's not upside from here. So I think you can participate and try to figure out if there's going to be a broader leadership shift. I think consumer cyclicals matter a lot more in terms of determining the veracity velocity and the endurance of this current rebound rally.
Right. That's why we're keeping a close eye on some other names in retail, for example. Turning to the broader economy, Goldman, speaking of Goldman, reduces its recession odds from 45% down to 35% and raises the growth forecast for the U.S. following that trade war détente with China. Goldman Sachs chief U.S. economist David Miracle joins us here at Post 9. David, great to have you back. Thanks for the time. So we've talked a lot about the Goldman House view through the depths of April. How much positive would you say you're turning, if at all?
Yeah, I would say we've avoided a worst-case scenario. So we've avoided the sort of production disruptions that we would have seen with tariffs at levels that would have blocked trade between the U.S. and China. We had already assumed in our forecast that a 145% increase in the tariff rate was not going to be sustainable. But the decline after the deal was a little bit larger than we had previously assumed. So we now think that the increase in the U.S.'s effective tariff rate will be about 13 percentage points versus 15 before. That means a smaller increase in prices. That means a slightly smaller tax-like hit to disposable income and to consumer spending. And we've also seen, of course, over the last month, a gradual easing in financial conditions, which means, surprisingly to me, that despite having tariffs that are about 8 times as large as in 2019, markets taking it pretty well. And so that means less financial amplification of the growth hit. So,
some of your peers might argue, a 13, 14% average tariff is still a tax hike, one of the biggest since the Second World War, and the economy's got to absorb that. How hard will that be?
Yeah, I think that's absolutely right. I would say we are in a good place, as good of a place as we could be to absorb that, in that profit margins are starting high, the layoff rate is starting low, private sector balance sheets are starting in very good shape, and so companies probably won't be jumping to lay off a lot of people. We do think this will be a year where economic performance is mediocre. 1% GDP growth is about half of our estimate of potential. We think the unemployment rate will drift up a little to about 4.5%, but a less bad outcome than we had assumed under higher tariffs.
That kind of muddle through or, just above stall speed type of outlook, where does that leave the Fed? Because if they're still getting job growth, if it's just a slow drift higher in the unemployment rate, and they're still going to be a little bit stringent about trying to get PCE inflation down toward 2%, does it just mean on hold indefinitely?
I think the message from the FOMC has been inflation's high. Some survey measures of inflation expectations are high. The bar to cut is going to be higher than it was in 2019 when they did move very preemptively. This time, they want to see some real evidence in the hard data. What we're penciling in, I would say, is mediocre, but not quite weak enough to draw them to feel like they have to cut in an environment where high inflation makes it a little bit awkward. So we took out the insurance cuts from our forecast. We now have them waiting to cut until the tariff effects on inflation have passed and inflation has come down. So we have the first cut now in December, continuing to next year. Same 3 cuts, same terminal rate of 3.5 to 3.75, but different motivation and starting later.
That's becoming an increasingly common view, that December cut. We were talking about the 30-year yield today, and watching House Ways and Means do this 17-hour markup. Are Treasury yields reflecting anything that's happening in this process?
I think, the market is kind of coming to terms with maybe it's not as likely that they'll be forced to cut soon. And so that has some implications for the back end as well, if the cuts come later. We wind up, thinking about kind of the longer term terminal point, the neutral rate anchor for the back end in basically the same context as before. I do think that we've learned that the administration doesn't want to hit financial markets and the economy too hard. That means, well, if you have 35 rather than 45% probability of recession, less risk of the very deep cuts that you would normally see in a recession. That, too, has implications for where the curve should be, and I think that's part of what's being priced.
I mean, it's such a whipsaw in the narrative when you consider that we were talking about, these punitive tariff levels possibly alongside this idea you were going to get some fiscal contraction, right? I mean, whether it was through DOGE or the budget process. And now it looks as if we're not really going to have much fiscal payback, at least on offer right now.
I think that's right. The tariffs, you can think of like a tax hike, but the tax cuts, the spending cuts, some spending increases, our assumptions there have not changed that much since Inauguration Day. I think on net, the effect of these things on the economy would be small relative to the tariff effect. The economic picture for 2025, to me, is all about the tariffs. Some aspects of that, the tax-like impact, I think are pretty straightforward. We feel pretty confident in the impact. Other effects, like the effect of uncertainty on businesses willing to hire and invest, there's a lot more uncertainty there.
Where's the trend on like net disposable income? Is there a spread between that and actual spending?
I would say for a variety of reasons, including a deceleration in disposable income, consumer spending growth ought to decline this year. We have seen a huge decline in immigration over the last year and a half. We just don't have as many people to put to work to create jobs for. That's a hit to disposable income. We've seen wage growth continue to moderate. The wealth effect has gone from positive to more neutral. And of course, tariffs function like a tax, so that will further reduce disposable income. The hard question is, consumers have been signaling a lot of anxiety about the outlook. For example, we've seen big increases in people's concerns about getting laid off, I think connected to some of the trade war fears. Is that additive to the slowdown that you would get from all of those fundamentals? Perhaps a little bit, but I would still see this as a mediocre but not overly weak consumer picture, same as our broad economic forecast.
Right. Interesting to see the evolution along with the policy evolution that we've gotten in the last few weeks. David, thanks. Good to see you. Thanks for coming to David Miracle.
All right, here's our roadmap for the rest of the hour. Coinbase surging this week on news it's joining the S&P 500. CEO Brian Armstrong will join us to talk about that news, along with regulation and growing competition.
Plus, the FAA is meeting right now with airlines in order to try and cut capacity at Newark Airport. This follows a score of problems at that airport. We will bring you the latest.
Are we on the cusp of a boom at the ports as companies rush to bring goods in before the 90-day agreement with China expires? Gene Soroka from the Port of LA will tell us what he's expecting now as Squawk on the Street continues after this.
You download Dave.
President continues his trip in the Middle East today, out with some comments on Boeing. And for that, we'll get to Eamon Javers. Hey, Eamon.
Hey, Carl, that's right. The president continues his deal-making trip. He's in Doha, Qatar this morning, and he is announcing a major deal for Boeing, a purchase of 160 aircraft, the president says. He calls it the largest deal ever for Boeing. In a signing ceremony with the Emir of Qatar, the president appearing very pleased to make this announcement, Carl. And it's a major deal for American manufacturing. That's part of why the president has been on this trip, is to generate a lot of business activity for American companies. And he appears to be doing it again right now.
We're just looking at Boeing's share price, Eamon. 206 was 128 on April 7th. That's almost a 60% gain in 4 or 5 weeks.
Wow.
Yeah. Look, I mean, this announcement was expected, but I think the number here might be surprising a lot of people to the upside, right? This is a huge purchase.
Eamon, thank you. We have some retail stocks making big moves this morning ahead of Walmart's report tomorrow. American Eagle sinking after the company pulled guidance and writing off $75 million in spring and summer merchandise amid slow sales and steep discounting. The stock down 7.4%. Burberry, meantime, surging after announcing restructuring plans that could lead to nearly 1,700 layoffs, and the company's sales fell less than expected in the fourth quarter. The stock up 16% right now. Some relief for PVH shares as well after a rough start to the year. Jefferies upgrading the Calvin Klein parent to buy from hold, arguing shares can rally 30% from here, in part due to improving trade relations with China. Shares up 6.5% right now.
And it's conceivable those improving trade relations could have an impact on the ports. Some shipping analysts expecting retailers to take advantage of the lower tariffs on Chinese imports during this 90-day pause and use that time to rapidly import some goods. Joining us now on set is the Port of Los Angeles Executive Director, Gene Soroka. Good to see you in person.
Great to see you, David.
And nice to have you, obviously, right here. Gene, what are your expectations for a surge? And obviously, we want to also know what you're seeing right now in real time as well at the ports.
Yeah, David, last week we saw a drop of about more than 30% of the cargo that we were expecting coming in. For the month of May, we'll be down about 25%. No real indication yet about how big a surge may be, but this 90-day pause is not a lot of runway in our business, and the average of averages is still a 30% tariff.
Right, and I want to talk about that. Just put the down 25 or whatever the number may be for May in perspective. I know COVID, for example, we can all think about 5 years ago, but how does that rank in terms of a decline of that magnitude?
Second place. During COVID, March of 2020, we were down 50% at the Port of Los Angeles, and now we're looking 25% for this month of May. 17 of 80 scheduled ships were canceled for this month.
All right, so now we're dealing with 30%, at least for the next 90 days. It may go lower than that, but there's also a possibility it will either stay or go higher. What are your expectations in terms of increased imports?
Yeah, what I see right now, David, is that for about 4 consecutive weeks, we'll be pretty light on inbound cargo. Outbound as well. The ag sector hit specifically and really hard. Those 10% tariffs are cumulative based on other increases before. After that, we're going to start to see maybe some ship services reintroduced. For the month of June right now, there are still 11 of 80 services that have been canceled.
So on the empty shelves narrative, I know this is a few steps removed from the ports, but is there danger of that still, given the interruption in April?
Yeah, depending on how retailers and others buy, you may see spot shortages. We're right now at a tipping point because you got summer fashion, back to school, and May, Carl, is usually when the majority of the purchase orders go in for Christmas and the year-end holidays. So we're cutting it close in a lot of areas here.
Right. How long would you expect orders to get resumed until the 90-day deadline started to get filtered in back into people's minds?
Yeah, we're watching that right now.
Yeah.
Having worked in Asia for a long time, I still maintain a lot of contacts on the phone every evening trying to see how bookings or reservations are picking up, what services may be reintroduced. There's some pent-up demand, obviously. There's some products that were finished before this 145 went into place. So let's see how quickly we could load those up or get those containers to the ports and onto ships coming our way. No immediate jolt to the system just yet, but the next couple days should tell a story.
Meantime, rates are a straight shot up?
They may go up, but please remember that in the Trans-Pacific trade, about 90 to 95% of all that business is contracted annually. The spot rate is on a small amount of cargo, but is one of the indicators that we watch.
What percentage of the cargo that you're taking in does come from China, or I don't know if that's possible, and or the other countries, obviously, because we're still talking about South Korea and Japan and Vietnam and so many others of our trading partners that also have tariffs right now.
Right, David, 45% of our business portfolio is with China, both on the import and export side. That was 60% back in 2018, before the first 232 and 301 tariffs went in. So we've absolutely seen a migration of sourcing to Southeast Asian nations, but China still maintains a wide margin in that number one pole position versus the second player, Japan.
Do you think the longshoremen were an instrumental voice in sort of incentivizing this reversal?
I do. And our International Longshore and Warehouse Union put out a message a couple of weeks ago, which was groundbreaking for them. To be that strong on the subject of tariffs, let's get some attention. I also credit the media for amplifying our voice and saying, look, again, policy is policy. We're not talking politics here. But what we see on the ground, if you're going to drop by 30%, that impacts the dock workers, the truckers, the warehouse folks. It's the small to middle-sized importers that I'm most concerned with now. If they have to purchase at elevated prices, they can't necessarily pass that cost on to the consumers. They're competing with the big guys. So your neighborhood drugstore, pharmacy, home improvement store, they're the ones that we're watching right now. 125,000 companies call LA home on the import side of the business.
Is there a level of tariffs wherever it settles out that you feel is absorbable by that sector?
Good question, Mike. And what I hear from importers right now is they're going to negotiate a little bit with their manufacturers, see what they could do based on terms of sale, landed price. They'll try to find efficiencies in their own companies, a little bit of a margin squeeze, but let's do things a little bit better inside, and then let's see what we can pass on either to the consumer or, if you're a parts supplier, to the factory.
Are the other West Coast ports having a similarly bad May?
Yeah, all across the board. Some hit more hard than others. Last week, David, we had 16 ships come in. 11 had port calls in China, but another 4 specifically dedicated to China were canceled. We'll have a similar look again this week. So we're still moving cargo, just not at the levels that we should be this time of year.
Is it true that there were some diversions from Seattle to Vancouver, in other words? Goods
haven't seen that, really. That's been a debate for some time because you get the harbor maintenance tax in the U.S. It's a difference of about $300 a container if you bring cargo into Vancouver or Prince Rupert. So that may have a little different take when it comes to the terms of sale and the overall landing cost.
Gene, good to have you here, and of course look forward to further updates as well, given the importance of the topic. Thank you.
Great seeing you guys. Thanks.
Sirocco, Port of LA.
When we come back, it's a big day for the IPO market. Online broker eToro gets ready for its first trade. Another fintech player files to go public too. We'll get those details next. Later on, the CEO of Coinbase is going to be with us. We'll weigh in on this increasing competition, regulatory roadblocks, and news, of course, that his company is joining the S&P 500. Be right back.
Plus.
Welcome back to Squawk on the Street. Some fresh signs of life in the IPO market. Fintech company Chime filing to go public on the NASDAQ. Company says it had 8.6 million active members as of the end of March. Average revenue per active member around $250. They make money from interchange fees on their debit and credit cards. Also offer some high-yield savings accounts, free tax filing, and free payday advances of up to $500. And not the only story in that space right now, Mike.
No, exactly. Sticking with some IPO news, Israeli fintech eToro, it's an online broker, is slated to go public today after pricing above its expected range. CNBC's Tanea McKeel joins us with the latest as we await the first trade. Hi, Tanea.
Hey, Mike. Yeah, things looking really positive for eToro, raising about $620 million in an upsized IPO, which it priced last night at $52 a share. Indications right now looking more like $60 a share. And that's above its expected range of between $46 and $50 per share. So it gives it a market value of about $4.2 billion at the $52 pricing. The company and a group of its existing investors sold nearly 12 million shares at the IPO price. In its initial filing last week, Mike, it had marketed 10 million shares. BlackRock has indicated interest as well in buying as much as $100 million in Class A shares, also at the IPO price, and that is according to that same earlier filing from last week. Now this, like you said, it's a brokerage, a Robinhood competitor, a stock brokerage platform that offers crypto trading as well. About a quarter of its net trading contribution last year came from cryptocurrencies. And this IPO is one test of the market's readiness for new offerings and riskier assets. You were talking about this a little bit earlier on the show. eToro filed to go public in March, as did Klarna, StubHub. When the IPO market looked set to benefit from President Trump's return to the White House. But all three of those companies did end up shelving those plans as the tariff-driven turmoil played out in the following weeks. And this is not eToro's first attempt at going public. It tried to do so in 2021 through a SPAC merger, but scrapped those plans during a sharp downturn in the equity markets. So really encouraging to see these early signs for eToro.
Yeah, today you mentioned that, crypto, a pretty big portion of the business. Looking at the filing, it's the majority of the recent growth, right, is in crypto assets and derivatives related to it. So it would appear to be that's how the company's likely to be viewed, I guess, as another one of these, plays on the pie, getting bigger and retail interest in crypto, small investors in particular.
Yeah, absolutely. A much smaller company compared to something like, say, Coinbase, but really interesting to see what this implies for exchanges that are in crypto, kind of merging a little bit more into, stocks and other more mainstream financial services, and what it says about regulation as well. We're in a more supportive regulatory environment, and it will be interesting to see how crypto trading services get treated from the regulatory perspective compared to regular stock brokerage. Guys.
Okay, Tanea, thank you. Time now for a CNBC news update. Savannah now has that for us. Savannah.
Hey, David. Good morning. President Trump said today he is still considering traveling to Turkey tomorrow for ceasefire talks between Russia and Ukraine. Now, he says it's still not clear whether Putin will show up, but that the Russian president wants him to be there. Ukrainian President Volodymyr Zelensky says he will be waiting in Turkey for Putin. If he joins, it would be the first meeting between the Russian leader and Zelensky since December 2019. Sean Diddy Combs' ex-girlfriend Cassandra Ventura is back on the stand right now in Combs' sex trafficking trial. The singer, who goes by Cassie, gave details yesterday on Combs' drug-fueled parties known as freak-offs and claimed she was fearful he would become violent if she did not participate. And California Governor Gavin Newsom announced today he wants the state to stop enrolling more low-income immigrants without legal status in the state-funded healthcare program starting in 2026. He pointed to a higher-than-expected price tag and the impact of federal tariff policies as the reason for dropping the program, which first started enrolling people in 2024. David, I'll send it back to you.
Okay, thank you, Savannah. Breaking news this hour, Boeing moving higher. This is President Trump says Qatar Airways just placing a massive order, or an order for 150 jets. You can decide whether that's massive. We'll talk to a top analyst about what that news means for Boeing. You can see now it's the top Dow stock, actually, on the year. Squawk on the Street will be right back.
bank through Dave.
Boeing shares on the move after President Trump confirmed a deal between the company and Qatar this hour. Let's take a listen.
It's the largest order of jets in the history of Boeing. That's pretty good. It's actually 200, including the 40, so it's over $200 billion. But 160 in terms of the jets. That's fantastic. So that's a record, Kelly. And congratulations to Boeing. Get those planes out there.
Let's bring in Jefferies aerospace analyst Sheila Kahyaoglu to weigh in on this. So, Sheila, to what degree is this incremental versus what might have been expected, and how does it filter into to Boeing's backlog?
Sure. Thanks so much, Meg. So news reports came out over the weekend that there might be a big order coming out. It looks like it's 160 official aircraft, and Qatar has 130 in its order book. So it's certainly incrementally positive. Actually, one of the favorite notes we wrote this year was about a month ago, and it was about the trade deficit. And the easiest way to solve a trade deficit is with $70 to $400 million Boeing planes. Really eases it up, and President Trump is clearly using that as a negotiating tactic. And in this case, it's working in Boeing's favor. It's extending the backlog for Boeing. It is incremental. These are new jets that they would put in an order for.
And of course, it comes after China sort of relaxed its restrictions on purchases of Boeing's, which was imposed, I guess, just last month. But just put it all together in terms of how it sets Boeing up relative to how far the stock has already come back.
Yeah, the stock's had a great 30% move over the last month or so. And that's really been behind people getting scared of tariffs and the skyline being put away. But as we know, Boeing has not successfully delivered aircraft for 6 to 7 years. And 2025 seems to be the first year they're doing so. So putting it all together, in Q1, Boeing delivered an average of 35 MAXs a month. For the rest of the year, we were conservative and we were assuming about 30 per month. They're doing better on the MAXs. The news out of China yesterday de-risks it because Boeing delivered 18 aircraft to China in Q1. They have 50 for the remainder of the year. That's 18% of what they're expected to deliver. And now that they're allowed to redeliver those, we're feeling more and more confident about upsides to our estimates. And that's really why you're seeing Boeing working, is they're actually producing for the first time in 6 years. They're doing it correctly. That means they're getting better pricing, and they're building a backlog once again, which they lost out on given the MAX issues.
Sheila, can regulators let them go wild on production? And what are the limitations from both the regulatory standpoint and their own efficiency standards right now?
I think Kelly Ortberg and Stephanie Pope have taken a different view on that. And they really said, let's put the regulators aside. We're going to work with them, but we're going to build up in rate. So what they're focusing on right now is building 35 MAXs a month, or, they were at 25, actually. They're at 30 now, getting higher on that. And they're going to work in increments of keeping that rate for 6 months. And then eventually the regulator will let them go up there. So their plan is to get to 38 by year end. But the pace they're at right now means that they could do 38 MAXs probably by the summertime. So they're outperforming their expectations. And I think as they implement these safety cultures, it's just helping Boeing. And we were just at one of their facilities a month or two ago. And it's very evident, even over the last year or two, the changes that they're putting in place. They're just making it more user-friendly for the workforce to build these planes and document what they're doing.
Sheila, if we can just come back to today's news. So the order from Qatar, you said they have 130 planes in their order book. Is this an additional incremental 30 planes, or is it an entirely new order on top of the 130?
It would be we don't know officially, but it would be an incremental order of 160 planes. It's mostly wide bodies, of course, given where it's a Middle Eastern carrier. So it extends the backlog. Right now, backlogs are about 6 to 7 years for narrow bodies, about 5 years for 5 years for the wide bodies. So it would extend the life of the 787 and just build a better backlog for that. So 160 planes additional to what Boeing already had.
What they already have, right? And so delivered over what period of time? Typically,
we don't know, but typically maybe 5 years or so.
Mm-hmm. Some viewers had questions if it's 160 jets and a $200 billion deal. I mean, that's a lot per jet. I assume some services are rolled in there too. Is that how it would work?
We don't have the exact breakdown of what types of jets it is. So it's mostly wide bodies. So I can't do math that quickly on television, but there could be services rolled into that. Planes are under warranty usually, so there might be some element of that. I don't know if there's any defense in there as well, but it's clearly an incremental order. And as we head to the Paris Air Show in about a month, we're going to see more and more of these dialogues take place, and that'll continue to help drive Boeing a bit higher.
And finally, given Qatar and the airplanes, I mean, Air Force One, where are they in terms of delivering what they had promised?
I think the defense side is still a work in progress. So the way we think about Boeing is commercial is really the driver of free cash flow. And about 70% of that comes from the 737. It's very important to deliver those planes on time. And then the wide bodies are an incremental 20% of that. What we hope for the defense business is that it's losing about $1 billion of free cash flow this year. It lost $2 billion last year. We just hope that the development programs are net neutral. And they did a good job of that in Q1, to be fair. They generated profit for the first time in several quarters. So all the headlines apart, we just want the defense business and the development programs there to be sort of break even at worst.
Right.
All right, Sheila, we'll wait for some of these details to be filled in. Appreciate you giving us some context there. Thank you.
Thanks.
We have a whole lot more next hour on aerospace as the FAA convenes an emergency task force surrounding the problems at Newark Airport. Former acting administrator Billy Nolan will weigh in on the fixes that are needed.
When we come back, the road ahead for crypto as Coinbase surges on this inclusion to the S&P, while a key stablecoin bill failing in the Senate. CEO of Coinbase will join us live from D.C. in a moment. Plus, some details on a key earnings report coming after the bell. Big implications for the AI trade. We'll talk about that after a break.
Welcome back to Squawk on the Street. Bitcoin holding on above $100,000. It is on pace for double-digit gains this month. You see it there, just over 103,000. Related names like Coinbase, Strategy, Marathon Digital, and Riot Platforms all on pace for big gains in May as well. You see that Coinbase in particular up 26%. The CEO of Coinbase will join us in just a moment to talk about the recent momentum for Bitcoin, along with the news that his company is joining the S&P 500, as well as the stablecoin bill in Washington.
Coming up after the break, this mystery name is up nearly 60% since its debut. Not a single sell rating on the street, and it's now facing its first big test since going public. We'll get those details coming up. Also, a quick programming note. Later today on Closing Bell, Wapner's live from Sohn. 2 major interviews, David Einhorn and Jim Chanos. That's coming up at 3 p.m. Eastern Time. Be right back.
Insurance.
Shares of Coinbase up big this week after news the company's joining the S&P 500. But the outlook for crypto regulation in Washington still a bit murky. Last week, a key stablecoin bill faced a setback in the Senate when it failed to gain enough votes to advance. Let's get to Emily Wilkins on the Hill with the CEO of Coinbase, Brian Armstrong. Hey, Emily.
Hey, Carl. Well, yes, here today with Brian Armstrong. And Brian, thanks so much for joining us today. You, of course, are on the Hill a week after this key stablecoin bill wound up failing in the Senate and the loss of this bipartisan coalition. What is your outlook for this stablecoin bill? Can this get back on track?
Yeah, well, I saw the actions last week as really just the first round of negotiation. I'm meeting with everybody on both sides of the aisle today, and the Senate has a lot of urgency to get this done. There's 52 million Americans who own crypto. They showed up in a big way in this last election, and what they really want from their representatives in the Senate right now is to pass sensible legislation for stablecoins. That needs to happen this week, And I think there's a lot of bipartisan support to do it. Now, the details really matter here. And we need to make sure we get this legislation right for America so we can continue to have innovation. That means crypto should be treated on a level playing field with banks and others so we continue to have financial innovation. It means that things like DeFi should not be brought into the AML rules. That would be a dramatic expansion of AML laws into a surveillance state. We don't want that for things that aren't trusted intermediaries. That's where the AML laws should be applied. So the details matter, but I think there's a lot of interest to get this legislation passed this week, and we're very supportive of that.
So are these just changes in the bill that are needed to get support, or is another piece of this Democrats saying that they can't pass any crypto legislation while the Trump and his family are personally benefiting from their crypto investments?
Yeah, so there's a lot of details in the language being negotiated at the last minute, just like any good negotiation. There's lots of concerns I've heard about, Trump family and that, but whether you love crypto or hate crypto, you need to get legislation passed. It really shouldn't matter. And what the president is doing, if you have concerns about that, that's why you should want legislation so it can be brought within the regulatory perimeter.
I also wanted to ask a little bit about eToro since they have their IPO coming up. What does it mean that you have a group that's kind of merging crypto with a little bit more of traditional financial investing? And what does it mean for the crypto industry as they get closer to being adopted a bit by this mainstream financial markets and regulations?
Yeah, well, we see crypto as a technology to update the financial system, and that means everybody is going to have to add crypto technology. It's kind of like when the internet first came around, and first you had .com companies, but eventually every company was using the internet. So we're really supportive, and we see that every bank, every fintech, every traditional brokerage, they're going to start adding crypto products, integrating stablecoin payment rails. And Coinbase, we're the leader in this space. We can also help power that for a lot of these people when they come in. And so we're very supportive. We want to sell them our products and services. We want everyone to come into crypto.
Are you worried, though, that could lead to more regulation on the crypto industry and kind of the deregulation is part of the reason folks are interested in crypto to begin with?
No, actually, we think legislation is a big business enabler. That's why we're so supportive of it. In the past, we had a lot of lack of clarity, and it was weaponized against the industry. So we're supportive of getting both the stablecoin bill passed and market structure, which we think would allow the U.S. to be a financial and technology hub for many decades to come.
And of course, big news for you guys on the S&P 500. Is that going to change your outlook at all, or the impact that Coinbase has?
Well, we're very happy to be included in the S&P 500. It now means that crypto is here to stay. It's going to be a part of everybody's 401k. It's a testament to the hard work of our employees and our investors, and it's a big appreciation to our customers, too, that helped us get to be one of the most trusted companies in America, and so we couldn't be happier.
Thank you so much. That was Brian Armstrong, CEO of Coinbase. Guys, back to you.
Okay, thank you, Emily, and thanks to Mr. Armstrong as well. The mystery chart that we teased a bit earlier, it's newly listed CoreWeave, just a few hours away from the company's first results since going public. That was back, of course, in March. It was the biggest technology IPO the market has seen in over 4 years. Came public at 40, so the performance has been quite good. Christina Partsinevelos is here with what we're keeping an eye on. Christina.
Quite good, 65% higher, so not bad. But CoreWeave's journey really showcases its explosive growth, and that's why you're seeing the stock up. It's had an astonishing 737% sales increase in 2024. Deutsche Bank analysts describe this trajectory as among the fastest they've ever witnessed in tech, with market expectations really pointing to at least 156% growth in 2025, followed by continued triple-digit expansion in 2026. And for those that don't know, the company is a pure AI cloud play. So they rent out their GPUs as a service, and they have major backing and support from NVIDIA. That is crutch to this story. But much of this growth for CoreWeave has been built on debt. Last year, the company had almost $8 billion in debt, and the expectation from a bunch of analysts, if you take the average, is that it'll hit $21 billion of debt this year. And that explains maybe why CoreWeave is reportedly seeking additional debt financing just this week, a move that could potentially impact its credit ratings and, of course, we know results in higher interest obligations. Morgan Stanley bets that free cash flow won't turn positive until 2027, but the company can still deliver, according to them, in this upcoming earnings season. Why? The AI cloud environment still remains incredibly supply constrained. Microsoft, one of CoreWeave's two main customers, which is a problem, customer concentration, that's a whole other story, but highlighted they're expecting to be supply constrained beyond June. Supermicro also issuing similar commentary in their earnings report. CoreWeave has a substantial contracted backlog as well, which could provide some stability amid amid these market constraints, there's really two camps for this particular company. But you can see since the IPO, up 65%.
I remember highlighting a lot of the concerns amongst investors not that long ago when it was coming public. Obviously, they took the price down, but it's performed very well since. But to your point, Christina, the cost of their capital and Microsoft, which was as much as 60% of their overall business, I guess continues to be a question or a concern. I'm also curious as to whether they may, they indicated a potentially desire to build their own data centers as well. Is that something we think could start to happen?
I don't think it would be something that we would hear on this earnings call unless things are really bad and they needed to divert customer attention or investor attention away to their own initiatives. But you have to think every time that they build out their data centers, they need to book that contract first. For example, $12 billion from OpenAI. That is still in the works. They still need to build it out. So I think for them to build out, they would need way more cash flow.
Christina, thank you. Christina Partsinevelos. By the way, do not miss a First on CNBC interview with the CEO of CoreWeave tomorrow morning, right here on Squawk on the Street, 9:30 a.m. Eastern Time. Meantime, some news coming out of Warner Brothers Discovery's upfront presentation this morning. The company says its Max streaming service will be rebranded as HBO Max this summer. CEO David Zaslav says, quote, "Today we're bringing back HBO, the brand that represents the highest quality in media, to further accelerate that growth in the years ahead." The White Lotus cast is on stage. Some talk about the new Game of Thrones franchise, but the reversion to the HBO brand, David, which was seen as so powerful for so many years.
Yeah, well, of course, when they went with Max, that raised a lot of questions. There were no shortage of people saying, why wouldn't you have stuck with HBO to begin with, given how much that brand resonates, particularly in terms of high-end production and what it had done for all of those years. So it's kind of funny they're keeping Max, at least for now, but now Max is at the end, so it could be easily dropped at some point. Of course, I talked last week about what seems to be an inevitability at some point, probably not too far away, of a split in the company or an announcement. It would take quite some time to actually get there in terms of it happening. But the upfront's going on, and I guess, this is one of the key announcements people are focused on.
The idea behind Max was to sort of, be neutral about a name when it was filtering in HBO and content as well as Discovery content. Max, of course, the sort of like secondary brand of the old HBO Cinemax. But does it mean that they're going to change the mix of content, or is it just a rebrand at the outset?
I'm not aware that they're going to change the mix of content at all. Now, interestingly, worth mentioning as well, Warner Brothers does produce a lot of content still for Netflix and for other streamers, which, conceivably over time that could change. But right now, that's also an important, obviously, part of their overall cash flow.
Also, such an interesting time right now for media names. There are 9 Dow stocks that are up 9% over the last week. Disney's up the most.
Yes.
From the low 80s to 111.
Yeah, Disney's really, it caught fire along with Netflix, actually. And, again, it hasn't been kind of an either-or question there. After the earnings, I do think that, their free cash flow guidance, all the rest, has gotten people interested. And it's kind of like cyclical, but also steady. Like, it's not as if you have to bet on gangbusters consumer activity for it to work.
Mike, thanks. Mike Santoli. After the break, what it could take to make Apple great again as the stock struggles to hold on to gains in May. We'll talk about what investors need to know as Money Movers begins.